Passive income is a sought-after financial goal. It represents earning money with minimal active effort. Cryptocurrency has opened up exciting possibilities for generating passive income. This essay will explore various methods for earning passive income with cryptocurrencies in 2025. Crypto offers unique opportunities for passive income generation. These opportunities come with risks, just like any investment. It's crucial to conduct thorough research and understand the complexities of the crypto market. This essay will cover various strategies for earning passive income with crypto. We will discuss cloud mining, staking, and yield farming. Additionally, we will explore traditional mining, crypto lending, airdrops, and play-to-earn games. Remember, this essay aims to provide information, not financial advice. Always consult with a qualified financial advisor before making investment decisions. Cloud mining platforms like ALR Miner and Pair Miner have gained popularity. They offer the potential to earn daily returns by leasing mining power. ALR Miner, launched earlier this year, boasts millions of users and a substantial mining infrastructure. They entice new users with a sign-up bonus. Pair Miner, a recently launched FCA-regulated platform, also offers a sign-up bonus and focuses on connecting users to major mining pools. Staking involves holding and locking up crypto assets to support a proof-of-stake network. This participation in network security can earn you rewards in the form of additional cryptocurrency. Ethereum 2.0, a major upgrade to the Ethereum network, utilizes proof-of-stake and offers staking rewards. Yield farming is another avenue for earning passive income. This involves providing liquidity to decentralized exchanges. By locking up your crypto assets in liquidity pools, you can earn interest and trading fees. However, yield farming comes with risks, including impermanent loss. Traditional crypto mining involves using specialized hardware to solve complex mathematical problems and validate transactions on a blockchain network. While potentially lucrative, mining requires significant upfront investment, access to cheap electricity, and technical expertise. Crypto lending allows you to lend your cryptocurrency to borrowers through centralized or decentralized platforms. Centralized platforms typically offer more user-friendly interfaces and potentially steadier returns but come with platform risk. Decentralized platforms provide more control over your assets but may have lower interest rates. Airdrops are free distributions of tokens by new cryptocurrency projects. They are a way for projects to gain initial traction and reward early adopters. Participating in airdrops can be rewarding, but it's crucial to research the projects thoroughly to avoid scams. Play-to-earn games have gained significant attention, blurring the lines between gaming and earning. These blockchain-based games allow players to earn crypto assets by participating in the game's ecosystem. Popular examples include Decentraland and Axie Infinity. The allure of high returns in the crypto market should be approached with caution. Market volatility is a constant factor, and prices can fluctuate significantly. Thorough research and due diligence are paramount before investing in any cryptocurrency or platform. When considering cloud mining platforms, exercise extreme caution. High returns and sign-up bonuses can be red flags. Verify the legitimacy of the company, its regulatory compliance, and the sustainability of its business model. Remember, this essay is intended for informational purposes only, and does not constitute financial advice. The cryptocurrency market is highly volatile and risky. Before making any investment decisions, it is essential to consult with a qualified financial advisor to assess your risk tolerance and align your investments with your financial goals.